Do you like money? If so, this is the podcast for you. Welcome to the Real Estate 401k Show with your hosts Ryan Gerdes, Mike Weinstein, and Justin Frederick, helping you build a legacy of wealth through real estate. Powered by the Real Estate 401k Group at West USA and the Frederick team with Fairway Mortgage. NMLS number 625918.
Welcome back to the Real Estate 401k Show. I'm your host, Mike Weinstein, alongside Justin Frederick and Ryan Gerdes. Go ahead and text the word box to 623-AZ-RECON. That's box to 623-AZ-RECON. We're not sending you what?
It's just the way he says it.
Yeah.
Box. You don't like it?
I love it.
Yeah.
Okay. Well, anyways, now I don't even know what the heck we're talking about. All right, we are going to be talking about big box banks, and a lot of times, when our listeners reach out to us and our buyers reach out to us, we're always introducing them to you, Justin, because really at the end of the day, your team's the best out there. But oftentimes when we're dealing with new people, they've gone down to their bank, whether it's Bank of America, Wells Fargo, and so forth, and I'm like, okay. First of all, I've got challenges and I've got issues with that. You used to work for one, so looking forward to some of your inside scoop on that. And the couple issues that I have with it. Number one, typically you're not going to get as a good deal as you will if they go with someone like you. But two, shit goes down on the weekends, holidays, and evenings, and good luck on getting a hold of somebody at Bank of America when there's a problem going on, or you need an updated pre-qualification form and things like that.
Yeah, so I worked for Chase for 7 years before I went off into a different world. And no matter where I was at, it was like a dream. But there's what's called overlays. So those are rules on top of rules. And they make these overlays to protect their business and their portfolio. But at the end of the day, it affects their clientele. And I don't think I think that they're too big for their own good. They don't realize how it hurts them on the asset side of things. If you're buying a house and you're putting 30% down and you're putting an overlay on for a credit score, what are we thinking here? We're putting 30% down. You think they're going to walk away from 30%? That's a big number, but it's much further than that. It's the organization of how the process goes. Each step is lengthy. So a 30-day close of escrow for a big box bank is typically pushing it. You have to have everything really run perfectly at a big box bank in order to hit a 30-day close of escrow, and you better have a clean file. It better be perfect. Now, I'm not going to say it doesn't work all the time, but there is many occasions where it doesn't work, and that's why we talk about, a lot of times when we're talking about me saving deals, it comes from a big box bank. I would say 90% of the time it comes from a big box bank. It comes over to me, and I'm like, this deal's easy, and we close it in less than 10 days. And the reason why majority of that happens is we're all sitting in the office together, and we have a team that has been created to support speed and service. So all these people do this job every single day, just mortgages. And what my processor does is probably what 8 different people do at a large bank. So it's going from department to department, verifications, verification of employment, pulling tax transcripts, just all kinds of things that are involved within a loan that you wouldn't think would take so much time. It goes to a person, it sits until they're ready to work on that. And I'm telling you, there's a lot of office politics and parties going on in those places. Maybe not parties, but just stuff dragging them away from their jobs. Whereas we're specifically focusing on, let's get this out. That's why our average docs to closing table is 7 days in advance, right? It helps us make sure that is good. But those guidelines, that's a big deal. We're working on a deal right now where we have a previous credit delinquency in the past 2 years where I know that overlay would be there. And the funny thing is, the money that I'm using, it comes from a bank that would deny it. So I'm going to use their money and close the loan where I know that they would deny it.
All right, if you would like some more information and have a conversation with Justin and his team, all you got to do is text the word BOX to 623-AZ-RECON. That's BOX to 623-AZ-RECON. Ryan, for you, Jess and I were talking earlier, giving it a lot of thought this year of what we're going to get you for Christmas.
Uh-oh.
You're getting a Bank of America shirt.
Okay. All right. Well, I do bank with them, Yeah. So like I can only like I'm going to talk shit about them, but in the same breath, I'm going to say that there are some redeeming qualities about what they're doing. And the reality is that they are so focused on secondary paper. They're not into originating, and they don't have the systems built for it, and that's why you're able to go over there and steal all their market share, right? But once you've originated it and it's closed, they're going to be really quick to buy paper. Because that's where they can do that in bulk, right? And it's already been fully underwritten. They can prove that it's A paper or B paper or whatever it's been identified as, and then they can put a number by it. Whereas going through the customization of it is too time sensitive for them. And let's be honest, most of those people that are sitting there, they're brand new. They usually don't have that type of experience with underwriting or originating, and so they're probably making, $30 an hour or something like that. They can open up a bank account or a checking account for you all day long, easy peasy, right?
They do a great job at that.
Yeah, for sure. And even when you have a little bit more established accounts with them, their wealth management side, they do
probably pretty solid.
Do pretty decent.
Yeah,
pretty decent work.
A lot of those guys have been there for a really long time.
Right.
They do a good job at it. They're well educated. They're trained.
Because they've worked their way upstairs, and so that bigger money gets kicked up there. So they do a decent job on that. But originating, I only have one success story with a big box bank, and I can't tell you how many times we've gone to contract with different PQs just because, I've been banking there for the past 20 years. They've always treated me right, so I'm going to go and try to get a home loan on it. And I'm over here like...
They think that matters.
Right, and it doesn't. So it get your loyalties and whatnot in check, right? Like
your loyalty should be to your pocketbook.
For sure, right? Like they are going to screw up the file. My own father, he's 850 credit score. He was doing a full doc loan.
Had plenty of assets in the bank, multiple reserves.
His debt to income was like in the low 20s, and he was putting down 40%. I don't know if I already mentioned that, but it was basically a dream file, and they denied him.
Yeah.
And I'm over here like, what are you talking about? Anybody would love to lend to my dad.
So I'll tell you this: we go to those places as loan officers to learn what we do. We go there because it's an entry-level position. They want to bring us on. They want us to hustle, make phone calls, take phone calls, work specific hours, and they can make a lot of money on the margins based on how low they pay the loan officers at those companies. So it tends to be a revolving door. You get people in just when they start getting educated on how the business worked. They got to deal with a lot of volume coming in because a lot of people trust those places. They think that I'm going to get a better deal because I already hold my mortgage there or I have my asset accounts there. And then once that loan officer gets the knowledge of what's out there, what's different in the guidelines, or what I can make in income, they leave that place. And so you have new people coming in. They barely have the training programs tend to be on the lower end of training for these types of jobs. It's not enough.
Their function is to open up accounts, take in cash so that they can turn around, kick it upstairs, and make money off of that cash.
They're basically trying to make order takers, and that's
right.
it. They're not trying to make somebody that's educated enough to give you the advice on what to do, and it's all based on experience within the work.
I've never heard you talk so much.
Really?
Yeah, you're on fire.
Am I?
We're actually got a topic you know something about.
Jesus.
We had a story this weekend. One of our real estate wealth managers has a listing a condo, and buyer comes through, submits an offer, and my agent's like, well, where's the pre-qualification letter? Because what a lot of people also don't understand, in Arizona, our purchase contracts require a specific pre-qualification letter or form to be attached to the offer. And the buyer's agent couldn't get one. All she could do was just get a letter from the big box banks, 2 paragraphs, Joe Schmo, highly qualified. That doesn't tell us anything.
Yeah.
But my other question is, going back to the pocketbook. So when we do have a client that comes to us and says, hey, I've been pre-qualified with a big box bank, we're going to highly recommend them to get a second opinion, kick it over to you. And what are you looking for, like as far as the differences and where the fine print, where people might be paying, they think they're getting a good deal, and that rate, the number looks good, but there's a lot of hidden costs involved. So what are you looking for? Or what should we be looking for?
A lot of times with big banks, you're not getting a lot of hidden costs. It's pretty straightforward. That's a nice thing about them. They're not real creative when it comes to that, and I feel like that's solid on the customer's standpoint. But I still want to get a loan estimate from them. I want to break down the fees, because realistically, it really depends on the loan officer you're speaking with. You may get a solid rate, but there may be buy downs involved with that. There may not be buy downs involved with that. So I want to see that. A lot of times you'll if you're buying a new build, a lot of times they're going to use a higher tax factor. So their payment might be higher than mine, but maybe their rate's better. Maybe their cost is better. And I'm just saying that until we look at it, we don't know. Now, I will tell you, if you're getting into like JP Morgan status out of Chase, there's a possibility that you're gonna get a good file. But I still say take a second opinion with me. And the reason why I say that is there might be some red flags within your file that I can get around that they're not gonna do. And I'll be able to tell you straight up front, this is what they're gonna deny you for, or you're fine. Easy file, go forward with them, and I will tell you that. I'll tell you that, and I'll tell you guys that too. You've seen me do it. If I feel like there's a easy deal to be done and somebody's getting a better rate than what I'm offering, absolutely, by all means, go there. But not very often does that happen.
Alrighty, well, if you would like to get a second opinion or talk about mortgages, and maybe you've been to your bank and you're sitting on a loan estimate and you're like Justin and his team to take a look at it, all you got to do is text the word BOX to 623-AZ-RECON. That's BOX to 623-AZ-RECON.